Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Thanks for tuning in, folks. This week, you might see things looking a little bit different in studio, and that is because Sai is out with the man flu, so I've had to call in some serious reinforcements, in particular reinforcements that wouldn't be affected by the man flu. So co-hosting me for this week's episode is going to be a good friend of ours, Mushima Gama. She joins us in studio, but alongside that, for our Market Matters, as you can see, Market Matters is sponsored by Trive for this week. We thank them for continuing to help us do the work that we do and for sending Sean Dendera to keep joining us in studio for all the madness. Sean, thanks again, as always. He never looks happy to be here, but we love having him here.
Very happy to be here.
We love having him here. We're going to be taking a look at a couple of things. We're going to be looking at gold. We're going to be looking at the Trump sanctions. We're going to be looking at opportunities in terms of what news might be coming out, what stocks might be interesting to look at, and everything else in between. I think before we kick off, I found it very interesting that the Trump is having a war with everybody, right? But the Trump-Canada war took a very interesting twist this past week, or the US-Canada war took an interesting twist this past couple of weeks or so. Actually, the last weekend and now into last week, with Kendrick winning the 5 Grammys and then going on to perform at the halftime concert. That was clearly the best evidence of USA versus Canada I've seen in the longest time.
I think it's the only credible one, because
that's it, because everything else, tariffs and everything, not interesting, but not like us.
Exactly. Drake versus Kendrick. Fair enough.
Yeah, that was an interesting development. I mean, especially coming off of, again, the Grammys going into Super Bowl being such a big event, right? And it's Americans think it's the biggest thing that happens, and you look at the numbers and you're like, it's not that big in the outside world, but okay, we'll let them have
FIFA
that.
World Cup, right?
It's not, right? We'll let them have that either way. The halftime performance taking everybody by surprise, and Kendrick clearly getting out of a lawsuit with some technicalities there as well. That seems to be the flavor of the month, right? That's just like,
look, we need some reprieve. We really do. From all the information, we just need something.
We need a break from Trump.
We need a break.
Which we're not getting, eh, Sean?
I don't think we're going to get that for the next 4 years. It's going to be Trump every week.
Really
so,
easy to it now.
I mean, one of our colleagues mentioned we shouldn't be speaking about Trump the whole time. But what else is there to speak about? Trump.
Sanctions on South Africa because of the land. I saw the Rand reacting to that, and the Rand strengthening was a clear sign that the markets think he's crazy. Because the Rand, for all it's worth, is a very politically driven currency, policies and all. And for once, you're looking at it and it's not the policies of South Africa that are working against us. At this point, it's South Africa's calm and Donald Trump's erratic behavior.
True.
Quick question, right? Okay, the Rand is strengthening, but do you think from a political landscape that the powers that be are responding accordingly, and that's why, the Rand is still a bit steady? Because we haven't panicked. We've gone out and tried to explain, guys, it's actually not expropriation without compensation. I mean, I was speaking to someone over this weekend, and he was saying that if we look at the act, which I have not read, so I cannot confirm this information.
Yeah.
But you're saying that first tier is that we're looking at land that's unoccupied, unused. So we're not going to now go and say, Mashima, we're taking your land. Jimmy, we're taking your land. Whomever, and so on and so forth, right? So I think that from a South Africa perspective and for preservation of our economy and the beloved Rand is we just need to find a way to not be, as Cyril said, bullied and explain our stance and stick to the stance, whether we believe it's right or wrong. Let's protect our sovereignty as a country.
Well, I will come back to that question. I want Mushima to answer it first because she believes that she doesn't want to live on Earth anymore. So,
Fair enough.
That was private.
yeah.
That's true. I think, I don't really think it's the land issue. Mostly, I think it's just a cover up. It's more of the Israel thing that is now causing him. That's making that gout inflamed. But and if we stick to our guns in terms of the humanitarian part of things as to why we did it, then it's about time that we get all this aid cut off, guys, because that's how we just put in that chokehold. And I mean, not knowingly to Trump, he's literally going to start causing a decline in the dollar with what he's doing, because a lot of people are pulling out because it's now Trump and Elon. It's not just Trump, right?
Exactly.
And now Elon is part. I mean, have you read one of his biggest investors are starting to pull out of Tesla's their shares? They an asset management in Europe. I think it's about $230 million or even more that are pulling out. So nice. They're causing trouble, which I think is kind of necessary to change the status quo that we've been under, particularly in Africa.
Exactly. No, we were having this chat. I remember having this chat with Sai last week as well, after we finished our episode, to say that Donald Trump could quite possibly be the catalyst that causes the decline of the dollar that he's trying to prevent. Yes. You know what I mean? And that's because of the radical behavior and what we're seeing in the markets. On the other side of it, on the land issue and what's happening in South Africa, the political maturity, aside from the debates that are happening on X and all these other platforms, whether it's right or wrong, that's different conversations for another time, 100%. Right? What you mentioned, Sean, quite importantly around what's actually happening and how the responses are being perceived in the market is kind of what's been driving, again, things like the dollar, things like the rand against the dollar, but also when you just look at where risk is. We're going to look at gold in a second. And for the first time, everybody's like, yeah, we're going to stay away from that corner of the world.
Exactly.
Yes.
Because you actually don't know what's going to happen, right?
It's so erratic. Like, it's so exactly. Now it's the war with the straws. Like,
yes. Yes. Down with paper straws. We're bringing back plastic. Those are not my words. Those are the words of the 47th President of the United States. Please do not quote me. Thank you. Yes, the straws are another thing that people are fighting about.
Like, we don't know.
There was a point I wanted to jump on, which you mentioned, right? And we mentioned this last week as well, about the funding, right? Like last week, I mean, we say that maybe it is a good thing, right? Because it allows us to recreate ourselves, right? Reevaluate, see how we can become more self-sustainable.
Who are we without the money? Exactly. Find out who we really are.
Exactly. So there is positives and negatives. Obviously, there are people that depend on the aid and the money that was coming in. But long-term wise, we got minerals, we got a strong financial sector. We just need to find a way to consolidate and ensure that the country actually grows in the right direction. And then we technically do not need aid if we get GDP to the right point.
Also, the aid has been cut over the years. It's not the first time they've been cutting it. So we've been knowing that they're going to cut aid.
Exactly.
It's about time we change.
I listened to the State of the Nation address last week, Thursday, and I found one or two other points quite interesting. One of them was that around the aid that South Africa gets from the US for things like HIV and TB treatments and all of that. Cyril mentioned that President Ramaphosa, mentioned can't call Malume Cupcake just by his first name like we know him like that. We don't know him like that. I apologize. The president mentioned that I think only 17% of that funding still comes from the US. In other words, South Africa has been able to make up the other 80%. So we're not necessarily going to suddenly stop these programs because we don't have that funding. And he mentioned very clearly that it's about just finding that balance and catering for the amount that's no longer coming through. To that point, there's already rumblings that China is happy to give us money for that.
Exactly.
But they're obviously happy to back a lot of
double-edged sword.
And that's the BRICS. That's the other thing, right? The BRICS conversation.
Exactly.
Yeah.
That's another thing that we should be. It's just Trump always feels like he's won with the whole Canada thing, with the tariffs. The agreement they made was something that was already agreed on. So they just put in, and he's like, okay, I won this one. Okay, cool. And now it's the sanctions South Africa, but they've already been. So, okay, I won this one.
Your Canada thing just reminded me of something very interesting. Trump came out and said, we're undoing the worst policies or the worst trade deals or whatever that were put in place for Canada, right?
They're still in place.
Who put in place those deals? It was Trump in 2018. Trump is undoing Trump. That's exactly what happened here, right? So in 2018, he signed this deal and said, this is the best trade deal in the history of forever. Now he's come out and said, this is the worst trade deal. We can't have this. We don't know who put this in place. We're undoing it immediately. And suddenly he's the hero. How are you the villain and the hero in your own story?
It's an interesting way.
It's a very interesting story, eh?
It's
but this comes to the point of, and I'm glad you've got the chart up around the gold side of it, is the markets are like, we're just staying away. We don't want any of this. We don't know where it's going to go. We don't know what's going to happen next. We just know.
Which is why gold then becomes the
Safe
focal
haven.
point, right?
Tell
Let's
us.
go.
Tell us.
Let me
What are we
tell you.
looking
All right.
at?
So what I've done literally is just show you. I've kind of looked at this gold chart a few times, and it's just the result of it was a bit scary because I thought, in what way could gold go there? But what you do in technical analysis, obviously look at what happens past in order to see what's going to happen in the future. So I'm going to flip on from the old chart to the new chart, so you could just see how this is probably going to pan out. So I've got the chart here. To the most extended I would, which in a trading view, it gives me about 2002. But we'll look at it from 2006 up to where it really spiked up to
So
about...
around 2011, 2012-ish or so, just before that.
Just note that is a 6-year period.
Okay.
Now, I've kind of added the Dow theory so that you can conceptualize everything in terms of how the trends go. So the Dow theory states that every time there's optimism in the market, the trend becomes steeper. But the trend then becomes steeper when a particular trend line is breached. So in this case, in time, this key trend line from this first phase, and it's in 3 phases. So when it breaches the first phase, it becomes steeper. When it breaches the trend line of the second phase, third phase becomes steeper. But the third phase is just like candles going up. Scariest in the sense that you don't know when it's going to pull back, but the returns from that are juicy, you know? So this is a 6-year period. This was a point in time. I think all of this was post the Great Recession, and then it became this sovereign debt in Europe that then caused that demand. And then this was that third spike thing. That third spike is usually the shortest, the juiciest, but you need to be in the second phase already. And then from there onwards, it then plateaus. So how you would then have calculated where it's going to go, it's always the width of the trend of the channel. So the channel there said it was predicted it would go to 1,655, and the channel breakout there predicted it was going to go to 1,825, but it just went up slightly to 1,920.
Yeah, but you covered, in both cases, you covered the full distance,
yes, the
if not
target
more.
of, yes. And then from that time, when that is complete, then the third phase is usually the one that triggers a potential downside.
Okay.
And when the third phase is done, it goes to the second phase. When that is breached, then it's just downside from there onwards.
Okay.
This is a 6-year pullback. And this is pretty much the time when there was a quantitative easing in the US. The dollar became more attractive. That caused the gold to pull back. Now that was a 6-year. This is a 6-year from 2011 up to, when it broke out 2015, right? That's roughly. Now I'm going to squeeze to this part.
Well, December of 2015, so 2016 effectively.
Yeah,
So
2016,
6 years. Yeah.
So then this is our current place. So this little part here, this is where it broke out in 2000.
Okay, so that's what we just looked at. That's a small little piece there. Okay.
Yeah. So this part, so it broke out and then it started to do a funny plateauing here. That was really, it's just the most frustrating part when it's plateauing until it literally breaks out of its entire bear trend, which was part of the 6-year, which means then we're in, now take a look at this date. So it's 2019. What's a 6-year period?
2025.
2025, right? So this is the first phase, which is the blue part. It breached the upper slope. It's in the second phase.
Now we're getting ready for that third
Now we're
phase
getting
that you say
ready
is
for the
crazy.
third phase.
Yeah,
I
so
see
that's about it.
3,400 on a chart. Whew.
I know. When I saw this, I was like, I think it's a bit too overzealous. Maybe just mention the shorter targets. Now, remember when I came on the last time, we were literally around here, and I mentioned that it might then go to 2,590. Which
No,
it
you
did.
called 2,610 and it hit exactly
Yes,
that.
it went around there, but that was the target for this.
Yeah.
Now it broke out of a little flag thing. A triangle thing that just says it's likely to go up to 2,990. Also heading to this slope here. RSI overbought means we should anticipate a bit of a pullback. Thank goodness, because some of us would like to get in, right?
100%.
Yeah, would like to get in.
100%.
So if it does pull back, I think the most it could fall back is 2,790, but it would still be within this channel.
So 2,800 or so odd.
So once it holds above there, now it has to hold above there in order for this to continue with its upside. trick is if it doesn't and it breaches this upper slope. Remember, when the upper slope is breached, the trend goes, and the third slope is quite steep.
It could just start off.
So it could start off that trend to about the target of the width of this channel upwards is 3,245. Now, if it does the 15% like it did previously, that means it could go to 3,440. And from there onwards, I think that's the time where we could then see that plateau, the part where we can see the 6-year.
Do you think that 6-year plateau would now be affected by the fact that of that 6 years that will now start, most of that will be under a Trump presidency? Do you think that might have, for the first time in history, potentially have a different outcome on the gold
inverse
price?
outcome? Because at this point, I mean, what I'm showing you is pretty much the utopia we can with gold until it gets to 3,440 in this geopolitical dystopia we're in. And because gold then becomes a safe haven, and with all of this uncertainty with Trump, this is literally going to potentially start that third phase. And the third phase, and the previous one was about a month old. Third phases could be less than 6 months. But I figure towards the end of the year, we're probably going to start seeing some plateauing once it has at most hit 3,440.
I have a question, just I guess for the viewers. So this whole time while we're going into these phases, right?
Yeah.
What do we... It's a bit of span in the works, and we're not going to hold you to it. What do you think is happening to the dollar or the dollar index?
Because there's an inverse effect. Obviously, the dollar would then be... The dollar is already starting with... There's an inverse, so it's pulling back whilst this is going up. There are cases where it's now... Remember, you have to buy the dollar in order to get gold.
Precisely.
Yeah, the gold is priced in dollars.
So if you're getting more dollars in order to get the gold, that's obviously going to push, that's demand for gold. So then there is a time when there's a decorrelation because of this uncertainty that's causing that. But then once it's reached a particular point in time and the dollar and gold, when it gets to the third phase, this is just based on technical analysis and the psyche of people, that when it is in that, then you're right, there is that inverse effect where gold is going to pull back and dollar is going to go up. But it's going to be a gradual, at some point, the dollar has to pull back from the levels that it's in.
Okay.
Right. But I think the correlation, there is a sense where there is a decorrelation. It's not always the same, but there is a decorrelation at some point. And I think this is when the fundamentals then come into play, where we will see that decline in gold of some sort.
Cool, because I'm a fundamentals guy, so hence I was asking the question.
No, it's definitely going to be an interesting time. I'm looking at a gold chart now. Current price just under $2,900 an ounce. We are obviously
very close
very optimistic around where we could be going. But folks, you know the disclaimers. This is Moshima's analysis.
Yes.
Do your own. Do not come back and say you got
she
financial advice from her. This is what she said. This is what happened. Do your own analysis. We happen to have a favorable opinion of her analysis, but that's from a different biased point of view. The disclaimer tells you we do not give financial advice. This is not financial advice. Sorry, Moshima, you were saying?
I was just saying that in the aspect where it doesn't breach the upper slope, then there'll just be a gradual move within the channel. But that upper slope is what will cause a breach from there, is what will cause that speedy or that celerity towards that quite quickly.
But also looking at that channel, if we say just tick along up through that channel all the way up to 3.2 even, right? And let's say we're still in the channel at 3.2. Surely that then says to me that when we break out of that channel, we're going to smash beyond 3.5. That just means it's going to be even more exponential at that point.
Yeah, it's a possibility. Because, the last, from 2020... From 2005 to 2011, it went up about 400 and something percent. We're only in currently from the second phase in the prior chart was about a 30% move. We're just under 30% now with the current move that we're in. And then there's additional 15 that we can anticipate, but that's if it breaches upper slope. If not, then it means it increases that range band on the upward slope. So that's just the part we have to considerably look at, is if it breaches that upper slope, or else it will just zigzag or oscillate between these two slopes.
Folks, that's why Simon said last week that the only thing he's looking at the moment is gold. We're going to leave the conversation on that note for the live stream. We're going to dive into a couple of things in our deep dive and our investor insights. Thanks for tuning in. Thanks for jumping on to TikTok. Big shout out while I am looking at our TikTokers. we finally did. I mean, it took us forever. It felt like forever. It wasn't really forever, but it felt like a really long time. But we finally hit 20,000 followers on TikTok. Shout out to our TikTok community. You guys have been absolutely amazing. What we've absolutely loved is just the engagement and the feedback that you guys have given us, particularly on some of the conversations. I mean, the school conversation was one of them. Recently, the contactless payments conversation. You guys are absolutely on fire in the comments. Don't stop. Share your unfiltered opinions. Give us all of that, because that's how we build the community. That's how we grow together. That's how we understand things better. So yes, huge shout out to our TikTokers and our TikTok community. We're going to continue to see if we can get bigger and better from here on out. As I said, this is Market Matters for this week. We're going to move on to our deep dive. We're going to move on to our investor insights. And as you know, those segments will be out later in the week. Welcome to our deep dive. We're diving into the property space. We're diving into the stokvel space. We're diving into just making investments more fashionable, property investments in particular. If you're just joining the show and you're wondering what's happening in studio, go back and check out our Market Matters. There's a big explain as to what happened to Sai this week, why he's missing, and why Moshima is sitting here doing the show with me. Moshima, thanks again for willing to just dive off the deep end. The property conversation is a conversation you and I have been having, and I think there's so many different angles to it, right? There's so many different perspectives around how do I do it? How do I get into the property space? How do I do it if I can't afford it? All of those sorts of things. And you were just telling me you waited 8 years to now make the move that you're making from a property perspective.
Yeah, because it was especially, I love Cape Town. And it was especially based on having to buy property in an area that I love. I'm a Joburger. Quite happy with Joburg. But I did see that there was a decline in Joburg, and there was, it's always cyclical. And I wanted to be somewhere that I also would love to go to without having to pay rent in Cape Town, because the rent then becomes quite ridiculous at the price that, it's currently going. And it was following through the trends of actually the parts of Cape Town that were semi-dilapidated, and that they've got, I hate the word gentrification, but it is kind of like, in that sense, cleaning up. Maybe let's just put it that way. And because of that, the property prices become a bit lower. With that in the future, then it becomes an appreciation, because then when it looks cleaner, then people want to live in there. So that has been my 8 year, trying to, it wasn't just looking at one particular area, it's just finding an area where I knew that, okay, at this point, the trajectory is quite up with appreciation in prices.
It's quite interesting, because the Cape Town conversation has been a very hot topic, with everybody saying Cape Town is unaffordable and those sorts of things. And you think about just property in general, and you think about, obviously, interestingly, it lines up with the other land conversations that are taking place. But I think about a company like McDonald's, where their business model fundamentally is securing good property sites, not necessarily how many McDonald's stores they can put up, but it's about, the site, that's it, right? Is the site convenient for us from a property perspective? And they buy out their property pieces. I don't know if they still do that, but last I checked, they bought out the land upon which the McDonald's would sit on, and you could have the lease to the McDonald's, and you could sell that lease to someone else, whatever. But McDonald's as a business then fundamentally is a property business.
Exceptional business concept. I mean, just think about the McDonald's that are around here in Joburg. They're very much in prime spots. I didn't really think, so that
the freestanding ones. Obviously, the ones in the malls are a bit different to navigate in that. But you think about all the freestanding ones and look at where they're located. It's a property play more than it is a convenience play. And in the long term, what does that do for a market? When you think about, you look at the Cape Town example. I mean, you say you've lived in Cape Town before. When do you remember Cape Town looking a certain way, or prices being at a certain point versus where they are now?
So I'm not necessarily have lived there, but prior, apparently, Sea Point and Green Point were a bit of a slump. And I mean, if you look at it now, those property prices have gone from slump prices to, it's crazy. If you want to live in Cape Town, unless you've got the balance sheet for areas in that part, then it's easy for you. But you need to, when you look at the properties, kind of move outside of town, slightly outside of town. But if you move completely outside of town, you'll get more reasonable, but the economies of scale in terms of your traveling to town, and I mean, unless you're a digital nomad of some sort, but that was the point of my thinking as well. At that point is thinking, okay, if Greenpoint and Sea Point were able to change as much as they have, then there is a saturation in town that's going to disseminate to the closer parts. And it's a natural kind of dissemination into that. I think from going from Greenpoint, that's it. Let's not going to Bantry Bay. And,
Bantry Bay, Camps Bay, that side of the world.
Yeah, that side of the world.
Yeah.
But then moving on the other end, where it would then be the city, the ICC, Woodstock, Salt River, that becomes more reasonable. But the trick is trying to catch it when it's low. Similar to what we talked about with Sasol. Once it's dipped, it's a time to get
we'll get into Sasol. That's coming up later in the show. But on the property side of it, how do you then have it be accessible? Because property in itself, whether you're a first-time buyer, whether you're a repeat buyer, is not a cheap exercise, right? There's so much that goes into purchasing a property, finding the right property, all of those sorts of things. And if someone's looking at it from kind of an investor standpoint, I've often had conversations to say, this thing can be done if we do it together. Because the moment you start thinking about, and I've written a piece about this. I wrote a piece about stokvels at some point last year, I think, that was published. It's up on one of the blogs that I write as well.
Let's take a look, yeah.
Yeah, stokvels being one of the most powerful tools that exists in the black economy and in the South African economy. Just that concept of being able to pool resources together and then go out and do something.
And the funny thing is, it's doable when you're doing it as a group, right? But as you individually, it's a bit difficult for you to save yourself as a stokvel. So the stokvel puts those rules that give you that mandatory thing that you have to pay in, which is an excellent part of now when you, instead of moving it, because previously it's for groceries, to help you with certain things. And when it was your month, you were either going to extend your house or, now it is now putting it into a particular fund, let's just say a property fund, where we all could share the costs of
what's coming up.
Coming up. So at a beautiful destination that that you all like, let's just Richards Bay or just Cape Town, anywhere in Mpumalanga, then you pool into that together and you can all share it. So there is that part of an investment. And obviously if you all decide to sell, then it is it's an appreciation of that and you've enjoyed the benefits of living there. There is that part of having to buy physical property or also just buying the shares itself.
No, but I think for a lot of people, it's the shares are one thing, right? So you can have a share portfolio, but there's something that comes from the utility of actually owning the property. So let's say a bunch of friends, and I want to get into that as to whether or not it's better to be investing with friends or investing with family and the debates that come from there. But the utility that says if Jimmy and Moshima go and buy out a 2-bedroom apartment in Cape Town and we have that property, it means that we now have a place we can use. If I fly to Cape Town for holiday, if I fly to Cape Town for business meetings, there's a place I can now use. I don't have to rent out accommodation, right? Exactly. So I don't get that kind of utility from investing in a growth point that might own property at the V&A waterfront. It's all nice and well to have the share appreciation, but I think with property, the different element is that there is utility. I can make use of it. I don't have to sit there and watch its value appreciate while I don't get to enjoy it.
Correct, which I think is probably more valuable at this case, specifically in a destination like Cape Town. I think it's something I would totally get into if it was a pool of you and I or 3 of us, and we just have that share because your capital to put in is reduced. It's not the amount, and unless you're looking to move in permanently, then that's a different story. But it is also it's the utility as well as getting the benefit from the appreciation in the price and just knowing, look, the growth rate of property in Cape Town is high. So I think it is we're moving towards that. And stokvels are actually starting to move towards that, which for me is quite thrilling because then one can create their own portfolio. And on the topic about friends and...
That's the thing, because now we look at the downsides, right? So do I do it with friends or do I do it with complete strangers? And you mentioned something about when we need to exit, right? So if now there's 10 of us in a property and only one person wants to exit while the other want to hold on, do we now go and find a replacement investor or do we now take up that person's share amongst the 9 of us? Because now those are the considerations that come alive when you now have other partners that are invested with you.
I would personally think for the semantic, it's probably best with people you don't know.
Okay, why?
Because then the human emotion, and don't get me wrong, there's something I am willing to do. That's something I've been calling my friends saying, let's just pull in, this whole thing of having to get land and then you all build each other's, pull in that. That's something I dream of. But these are very close friends. But even with friends, you know what, Jimmy, in fact, you just have to get the legal processes right. That there should not be no emotions involved in that. If anyone crosses the line or if anyone wants to do that, there is repercussions, or you will then, it's just getting the legals.
Just be on the same page kind of
just
thing.
be on the same page. And no one will be like, oh, we're friends. You're like, put the paper,
Protect everybody. I suppose
everyone,
look at the paperwork as we're not doing this because we don't trust anybody. We're doing it because we just want
is
to
key.
cover everybody.
You have to have the paperwork.
Yes.
Because the emotions can run dry. Families have ended because of these things, of friendships. You know what I'm saying? But
it's true.
It's the paperwork being done, but we all get to enjoy a piece of land and still be able to profit from it when it's time to exit.
One of the comments that I saw on X, I think it was late last year, was something about it's not the bond, it's not the property, it's the cost of the rates, the taxes, the maintenance, the upkeep, and all of that. And I suppose if it's a group effort, then you don't feel it as much, right? Then you say, okay,
It's
no,
such an excellent
my
idea.
contribution towards this is 200-300 rand, but 300 rand from 10 different people is 3,000 rand, and that whole property is then maintained, I suppose.
It's like a timeshare, right?
It is, right? It's a
Yeah.
timeshare, but without I think the timeshare concept was good at some point in life, right? I think about it back when it was around in my parents' and my grandparents' era. But the challenge with the timeshare thing was I couldn't use the property when I wanted
the
to use the
thing.
property.
Yes, because
So
it's
now if we build our own rules, and now the community and the stokvel says, oh, are you there this weekend? No, we'll take it this other weekend. No, we'll rent it out this other weekend.
And besides, it's a smaller collective than the timeshare. Timeshare was a bigger, it was a scheme with whole. But this is, WhatsApp group, you kind of chat, listen, guys, is anyone in there at that time? I think it is the most conducive. It's something that I think a lot of us are going to start getting into in terms of not owning the property, because owning the property on your own and you're not there for the entire year, it's just a cost that is...
That's something else, hey?
Because you need the uptake. Someone needs to be there to be flushing. Just something to...
What about the element of the property manager? Because now you've got guys that have the properties. I might have 2, 3, 4, 5 properties. I hire a property manager. I pay them a fixed amount and they're responsible for managing those properties.
It makes the deal sweeter.
Do you then do that even as a collective and say,
think
hey,
so.
Guys, we have day
Run
jobs.
it like a business, yes.
Run it like a business. Okay,
Run
there
it
we
like a
go.
business.
Run your property investment like a business.
And
Okay.
if it happens to be empty, let's say we all agree that, okay, right, December time, no one seems to be wanting to go to the part, because you can Airbnb it or something, that is additional income, but the income gets into a pool of some sort.
Or you put the income back into the property. So we say we're not going to generate any income from this. If we rent it out for X amount, all of that money goes into refurbishing it because you still get the benefit of that refurbishment.
And it reduces your property.
That's it. So
expenses.
you have Smeg appliances in your fancy property, in your holiday home kind of
You
thing.
know what I'm saying? And it's just the legalities and the emotion that's put into it. But the rest of it just sounds like a very credible
It sounds like a dream, right? But and I think about it from a dream perspective, and I'm like, but then if this is something that works out like that, why have we not done it at scale? And obviously challenges like not having the disposable income to invest into it and that sort of thing, those things come up as legitimate challenges as to what prevents us from going down this road. But I suppose another part of it is the fighting that happens and the lack of trust or the breach, or you
yes.
broke this, you must replace this, or the normal things that come with being human. And that's probably what we get around in the contracts, as you said. The legal side of it is what governs how we then
Also,
navigate
how
that.
the banks are actually offering the bond itself. So I don't know.
Yes.
Yeah, if you're saying, oh no, I need
That's
property
another
for
thing.
a mil and I just need $1 million. They're like, where are you getting the rest? And I mean, more conducive to that since it becomes a topic. But it is either you're putting in hard cash or you're getting the loan, but you'd have to explain it to a bank that I'm part of this.
So you're saying a hindrance to this is the financial system that we have. And as you say that, I agree with you 100% because I think about the times I've gone to a bank to have this conversation, and the conversation is, are you applying in your individual capacity? Are you applying in a joint capacity with some partner or with a family member or whatever it is? And then they assess all of everybody's kind of individual profiles and combine them and all of that sort of stuff. And I know with the stokvel, it's operated differently. And I know there's guys that have property stokvels. I must just remember who they are, and we'll have them potentially come onto the show, I suppose, to talk about this. But for our community, for the audience out there, for those that are watching and tuning in, I definitely want to get your experiences around the property space, right? Some of the questions you've had, some of the experiences you've had, some of the challenges you've faced. I mean, we've outlined some of them in this conversation, but that's definitely not the full exhaustive list of challenges that people go through. And I think the financial one is probably going to be such a massive headache for anyone thinking about this. But please share your experiences with us. Give us your comments, give us your feedback. We love to hear what you're experiencing, and perhaps what you're experiencing might inform what someone else goes through, and it might help them make a better decision for themselves. And we'd love to see how the conversation then unfolds from a property investment point of view. But you were saying?
So I was saying, unless, another cool way of doing it possibly is if you have a trajectory of when you want to buy the property. So for the 5 years, let's just say you all decide in 5 years, you will then look for something to buy. Within that 5 years, you accumulate the capital, because once you have a bigger deposit, the bank
makes it easier to finance.
It easier. But you, as a group, if we decide now,
But then don't I miss out on the opportunity? So in that time, what if that property gets sold, or the property we're eyeing gets sold?
No, you don't necessarily.
So don't look
at
at specific property.
Just
say
area and research on the area.
This is what we want to achieve.
This is what we want to achieve, and by this amount. So I'm trying to get a pool of my friends to do that, but this is for land though, and that will at some point try and retire on.
Okay.
But it's getting a date on when we're going to start putting in this money, so that and then also just getting your ducks in the row in terms of the legalities of that, and maybe presenting it as a corporate to a bank, unlike an individual.
No, I was thinking that. I was thinking going the extent of registering a company with the CIPC, getting that company. You can also register with the South African Stokvel Association. So you're governed by a Stokvel mandate, and do the whole thing the way it should be done. And then after that, everybody's kind of a beneficiary to the Stokvel. You've got the terms, you've got the legal side of it covered. I mean, speak to a lawyer, get all of that stuff in place.
I think it really is doable, and it is probably one of the best ways of personally owning property in an area that's quite expensive and has
with multiple areas. Because now, if I qualify, and perhaps this is something we could look into. If I qualify for R1 million loan, right? Why is it that I can't split that? So in America, I can put down a down payment of a certain percentage and then kind of like free roll the rest of it and all of that. In South Africa, they kind of have you take up the whole loan, and then,
you can put in a huge deposit though.
No, but I'm trying to think of it without the deposit perspective. So I'm looking at it to say, if Jimmy qualifies for R1 million, Mushima qualifies for R1 million, between the 2 million, instead of buying one 2 million rand property, why are we then not allowed to split it across 5 or 6 properties at a lower cost and diversify our own risk from that perspective?
That's if you're just buying property in order for buying property, not necessarily to utilize it.
But it's investment property, which also now attracts a different level of tax and all of those conversations. Yeah. Okay.
Got my mind racing. I'm feeling like, I'm just like, wow, this is something that we should, and I think it is gaining traction in that aspect, that people are like, we could do more with the stokvel money than just consume other things. Let's invest in it. I've been waiting for this opportunity to be coming on board, but obviously it needs a collective to start to make it come into fruition. And I think this topic will probably get a lot of people's minds racing.
And that's the point, right? That's why we have these conversations, is to share our experiences, to share what we know, what we don't know, to learn from each other and see if we can just improve our own financial lives and the financial lives of others. I think what we're going to do is we're going to look into the property stokvel side of it, right? I know there are property stokvels out there. I've spoken to some of them. I might see if we can reach out to them, get them back on the show, see how they've set up things. We might even look to see if we set up our own and see how we build that.
Exactly.
I'm just thinking because you do the math as well, right? If we do the math on, I think they did the math, it was an unrelated example, but someone did the math on the amount of people in the country, if we all contributed 200 rand or something. Oh, it was the alcohol thing. Someone said that South Africans spent 7.7 billion rand on alcohol in the December month, and they worked it out that if 40 million people had spent 256 rand a month on this alcohol or whatever it is, we got to or 256 rand a day or something like that. We got to the 7 billion. But that just gives you an idea of the power that numbers have, right? Give us your feedback around this. If we were to build a proper property stokvel, set it up, have it registered, have it governed by the Stokvels Association, have everything built in place for you such that you could deposit 500 Rand a month. That was it. Would that be something people would be keen to do? We'd love to get your thoughts on that, because if that's how we change everybody's lives and that's how we start to change our own lives, then that's it. I for one, I don't know about you guys, but I for one would love to have a property in Cape Town that I could just go to, know that I can stay there without paying an exorbitant amount of money, and potentially even know that I can go there without needing a passport. Those are those Cape Town passport conversations will start up again. But yes, we're going to leave the deep dive there because we've run out of time. We'd love to get your thoughts and your feedback on those particular points that we've left out there. We're going to come back to them and we'll give you feedback on them next week. We'll give you feedback, or even after that, as we continue with the rest of the year. If you guys are keen on setting up a property stokvel, give us a shout, let us know. Yeah, see, we've already got our first sign up there, right? So let's see how that goes. Until next time, we'll leave the deep dive on that note. And we wrap things up with our investor insights, continuing the conversation with me as has been throughout the day. Hosting the show with me is Moshima Gama. She's standing in for Sai, who's out. We're going to be taking a look at some interesting models, not the kind that sit in a GQ magazine, but the kind that Moshima builds. And then we're going to look at our wall. We're going to update the wall, see what's happening there, and see if we are liking anything in particular. Moshima, Valentine's Day is coming up on Friday. What model are you building? Apparently, it's not to do with that. It's unrelated.
It's just
what's
to
happening?
Give me a sign if, the guys are a hard buy.
Okay.
And if they're a sell, then I know that it's not, yeah.
Okay.
So, leading up to it, I just have to just kind of put in their name and see what the trend is doing for that. They pass trend into the future.
Okay. Okay. We'll get into the model in a second. Before we get into the model, community out there, I'm going to do you guys a solid, right? And I'm going to be a good wingman. If anyone would like to take Moshima out for Valentine's Day, she may or may not be open to that. Please don't come here with offers that are below. You know the quality of the woman that sits across from us. Please, please bring those offers through. And maybe, just maybe, we'll get some feedback next week on how the Valentine's Day went. That's all I'm going to say on the matter. We'll set up chats. We'll see what offers come through. She will decide the offers. We don't have any say in that, but don't say I didn't put you guys on, right?
I'll put the data in the model.
So tell me about this model you're building. What's happening?
All right. So look, I'm looking at a whole lot of stocks on it because I do analysis on commodities, equities, currencies, and so forth. And this is looking up at charts for all of those. So I needed something. It's just something that would give me signals on if sentiment is changing in any of the shares without me having to get into the chart or looking at the charts individually. So it started off as that, change in sentiment. So I just built a model based on macros based on that. Tell me when there's a change in sentiment. And then I started getting into a rabbit hole. And I was like, so if it tells me change of sentiment, will it tell me when to actually buy or
when
sell?
to act on that? Yes.
When to act. And if it is a point of acting, is it a good signal to act or is it a weak signal? So in it, it will
Strength
say,
of the signals
look,
as well.
it's reached
Yes,
a particular
yes.
level, but it's not a strong buy or it's not a strong sell. So I've been working.
How long have you been building this? Because this sounds
5
like 6
years.
years of work. Okay, 5 years of work. All right.
It's actually going to be my 6th year.
There we go. 6 years
I'm
of
in
work.
a 6-year cycle like gold, yeah. So I'm hoping it started off as just being for equities. And now I've moved into CFD trading.
You're just digging deeper and
That's getting
deeper
into an
and deeper.
hourly and a daily and not necessarily a monthly and a weekly. It's a lot of fun, but because I'm like writing the macros myself, you can sit there for hours trying to figure out why it's not working. But it is so thrilling once you see it all concatenating and coming together. So that's what the model is about. So
That's
I literally, if
crazy.
you ask me something, I just pull up, I'm like, what is it saying? And then it will kind of give me a signal that it's time to look at a chart because there's a particular development. So if it's trading sideways, it's not worth my time.
But you're building the model on your research and your style
got the
of
human
analysis.
element,
So
yes.
it's not saying just look at 1, 2, 3, 4, 5. It's saying this is what I look at as Moshima.
So it's a two-part.
Right?
So is what is happening on the chart without telling me. So if there is a strong movement, there was a fake out rather, it would say, look, it went there, but it's a fake out. And then when it comes, then that is the part of telling me what the chart is doing. and then the analysis part. That's the two-part part that will say, is it a good buy or not based on the candle performance.
The other things that you build into the model. Yes. That's quite interesting. I look forward to seeing what this thing looks like when I imagine it's something that you're always going to be working on and tweaking and adjusting, and as you learn new information, you build new things. So
it is something. Once it's complete, I'll share it with you. Just back testing at this point. It's a lot of back testing.
I can imagine.
And then you're thinking, oh no, it shouldn't have told me because of this anomaly not being added on. So it's a lot of that. But yeah, that's basically all my time. So if I don't have a date for Valentine's Day, I'm definitely building my model.
Okay. No, we'll come back to that. No, you can't be working on a Friday night when you should be enjoying the night out. But I want to look at how you got to that point. Like, because building a model, and from an investor point of view, we have every week on Investor Insights, we try and look at something new. We try and enhance how people approach investments. And I suppose for you to get to a point where you're building a model, you have to have thought something's not
there has to be,
sufficient for me. I'm not satisfied with what I'm currently getting out of the information. And as I say, that gold has just touched $2,900 an ounce. I'm not kidding. We are at all-time highs, $2,900 a fine ounce.
$90 away from that.
That's it, from your target in the Market Matters. If you missed Market Matters, go back. It's under our live tab on our YouTube page. If you're listening to the audio, it was the first segment in our audio. But the levels that were touched on and mentioned by Mushima in that segment are already coming to light here, and we haven't even moved through the end of the episode. We'll come back to gold. I want to look at some other things on our wall now.
Right.
We've had a couple of things on the wall that we've been tinkering with, that we've just been kind of trying to figure out. Where do we put them? How do we like them? And how do we feel about certain stocks? Sure. I want to start with Sasol. Purely because Sasol's now at new all-time lows. It was at 52-week lows last week. We're now closer to 70 Rand a share here. This is a stock at some point that was at 600 Rand a share. And so I know that your model has something to say about this. What's happening there?
So unfortunately, it's just been giving me a sell the whole time. So it's just saying, not now, not now, not now. But let me tell you that I am waiting with bated breath for the Sasol to go up, because, in fact, it's all-time low, Jimmy, which is very possible in terms. So the all-time low was literally at 20 Rand.
Yeah, 77. That was the pandemic. That was the oil price March getting to zero.
Yeah.
That chaos.
So, cyclically, that psychologically should be a point where, so there probably could be downside towards there before we see a little bottoming up thing happening. And from the model, it just seems as if the downside is likely to continue, which then means for people who are not in, people like you and I, who have been waiting
with bated breath,
means we need to kind of wait a little bit more. It looks as if it trades through, what's that level right there, 71.20, and it's RS weekly. RSI is not even that oversold. Ooh.
You say 71 Rand 20. We were at 73 Rand this morning. Let me check if we're anywhere near 71.
So we're
73.40 at the moment.
Yeah, so 71.20 is key support from 2020, in fact. So if it breaches that could just cause quite a thrusted downside to that 20 mark.
Okay, so
that means we must wait still.
Okay, so we're waiting for 71 Rand 20-ish to see what happens there.
Next level would then be 42.
That is
and then 42
scary,
it's a quick move to 20.
Yeah.
Then that's when we could I feel at that point, psychologically, there would then be that kind of top, that we just move sideways until we then see that upside. So in that sideways, still we can't get in. This is it's very much a wait and see game with this. Like, if you get in at this point and thinking, oh, it's nice and cheap, you might suffer the consequences of it falling to 20 Rand. So it's a wait and see game. And what the model is literally going to be saying is, at this point, it's saying stay short. Keep the downside's continuing. And at some point it would then say, look, there seems to be a change in sentiment. Give you a warning until it literally breaches a key level that says it's time to get in.
Okay.
As I said, at this point, it's like, stay out.
So what is your model liking then at the moment? What are you looking at, and what's interesting?
It's given a nice flag. It's been giving green flags on property stocks since 2020. And now something which I've been waiting for, as much as I've been waiting for with Sasol, is the telecoms.
Okay. So MTN, Vodacom, those likes. Okay. Yes.
Except Vodacom.
Except Vodacom. All right.
Yeah,
I thought
and-
you were going to say except Telkom, but okay.
No, that's the funny thing. Okay, now I'm not going to put fundamentals into it.
No, of
but
course.
Telkom. So Vodacom has got this silly way. It's just so erratic. The movement's so erratic that you feel like you've invested and then you can lose the money quickly. And I think it's based on a lot of the fundamentals and the whole please call me. The having to pay off. I'm not too sure what the status quo is, but
That's still happening. That ongoing case that's
think
gone
they
to
have
the
to pay
Constitutional
the-
Court.
the
Yes,
gentleman out now.
Yes. So the amount has yet to be determined. I think we're still appealing that case in the Con
so
Court.
that's the
Dark cloud.
the dark cloud or the conundrum about it that's not causing that. Even if there is that upward move, you may just be stuck in a sideways band. So that's particularly why I'm not liking Vodacom at this point. Is until this dust has settled is when we will then see that movement. But funny enough, your MTNs, which I mean MTN being,
Which, as you say, MTN bounced perfectly off of 80 Rand.
and what I particularly love about MTN is it broke out of that bull trend, bear trend rather, and this is a long-standing one, right?
Long-standing from 2022 February.
No, even 2016.
2016. Oh, yes. Okay. So 2015. Okay. 2014, 2015, we came down. Then we pushed back up, but we didn't go out and take out those highs. And now we kind of can. Okay.
So can you see the vibe?
Yeah.
Now it's broken out. And what I like, something that's very, very common with shares that break out, it's called a return move. So it breaks out, then it goes back towards the breakout point. And I call it the point of kind of trying to feel is this truly a real breakout. And I would like many shares to do that, because once there is that and it doesn't really return back into its bear trend, that's what sets off the
That's the
buyers.
confirmation
That's
of
the
saying we're
confirmation.
actually moving.
And this is like literally what we're seeing with MTN. Blue
Blue Label.
has always been my favorite since 2020. If you look at it right now, it's
Actually, yeah, I haven't looked at Blue Label in a while.
I've been
More affordable than its peers at
more
£6.50, I
affordable.
suppose.
Exactly. So that is one of my top pick from a while back.
Okay.
MTN and Telkom. I mean, yeah. I called it. It broke out of its. Blue broke out in 2024, and yeah, it was called a buy at 4.
We still need
Rand.
to kind of take out £7.50, I think.
Yeah, that would
if
be
I'm
the
looking
key,
at it. Yeah, key level at the moment.
That's a key level. Once it gets out of there, then I mean, what is the highest it has traded? This is very much a buy.
Now, highest is traded as 22 Rand ish,
I mean, look at that. You're
around
getting it
2016.
at these prices.
Yeah, you're getting it at less
It's a
than
nice buy and
25%.
hold,
Yeah, yeah.
For as long as that uptrend is intact. And if I do that little Dow theory thing, it looks like it's on that top that once it's breached, it could then go to that 750 quite quickly. So it would be.
And Vodacom?
Vodacom did a nice move, and I think it just followed its peers. It just didn't want to be left behind. It was like
I'm seeing it now at 120 Rand a share, kind of bouncing off of 87, 85-ish. Still a long way away from
Still a long way around.
180 Rand highs of 2017 or so. But as you said, we're not too optimistic about this at the moment.
Not
We're
yet,
liking
not
blue.
yet. We're liking blue.
We're liking MTN. MTN's already on our wall. I think we have Blue Label on the wall as well, if I remember correctly. Blue Label Telecoms would be
I
there.
would add Telkom as well.
We had Telkom as... I remember the conversation Si and I had around Telkom was we felt Telkom was stale. They weren't doing much. And they broke out from the 20 Rand to 30 Rand level, but we didn't see them going back towards 40 Rand or even 50 Rand. What are you seeing there?
I mean, it's a pity. I would have shown you the return move vibe, but it's fine. But it's already done that whole breakout return, and then it's very similar to. So in that, when you saw that staleness, it's because the share price wasn't doing much. In that, are we breaking up for real? Is this happening? And now when the buyer is seeing that it's happening is what we're seeing at this point. It's actually now trading in the second phase. Remember the 1, 2, 3 phases?
Yes.
So the second phase is going to get a bit more steeper.
So this is that phase to get in.
It's a phase to get in.
Okay.
It's a phase to get in. With MTN, though, I just want to warn you that just wait a little bit, because that RSI is extremely overbought on the weekly chart. So wait about a week or two before you want to get in, because you'd get in a bit cheaper than current levels. But yeah, Blue and Telkom are just saying you can invest at any time from today.
Yeah, because I'm looking at I've just put up a Telkom chart. Okay, yes, today was a good day for Telkom.
Nice one.
Yeah, today is up about 4% already. We had gotten to that 34 Rand and kind of hit, so we'd gotten to 36, kind of come down to 32, and now we're back at 36 again. So very interesting from that breakout from around 26 Rand a share, where it just refused to move
You're
from.
right. So now you remember that was key resistance. It broke and then got back to that 26, didn't infiltrate.
Now
that's what's attracting the buyers, and also breaking out of a flag pattern, which is quite. And once it does break from there, that's a huge move. Yeah, we could see
it is. I mean, at some point,
go through that $40.
That's it. At some point, Telkom was at 100 Rand a share around 2019. Even pre-2010, it was higher than that. But I mean, Telkom's obviously had their issues with being partly SOE. They've had issues with their SwiftNet business and unbundling that business for 6 billion Rand. But these are stocks to watch. So we need to update our wall. We need to update Telkom. We need to update Blue Label. MTN we have on the wall. We might even need to downgrade Vodacom. I don't remember where we had it on the wall, but telecoms is a sector you're liking.
Sector, yeah, I'm starting to like that because it's like a Sasol. Sorry to always compare. It's just been falling, really not giving us. But this type of move is now, and you can tell that it's clever money coming in with the celerity of the movement. It's just the asset managers who obviously don't want to disrupt the market, but they've been buying quietly, and every time it pulls back, they've been buying. And now you can tell that certain retailers are starting to catch that wind, which is why we're seeing this splurge of upside.
What sectors are you staying away from at the moment?
At this, for a near term, I would stay away from banks at this point because there's always this correlation between gold and banks. So when gold goes up, banks tend to struggle.
Okay,
you should look at that correlation. And with what's happening currently,
with the gold conversation we had,
I think that the banks are going to struggle a little until such time as the gold stocks start to pull back. So you might see a bit of just watch that correlation. It's quite a interesting one where there's a switch out of gold into, I don't know why it always kind of happens. So if one goes up, the other falls, and the other one, the other one goes. So if you invested in both, you should then know that one is going to pull back, but one would make up, for that loss. So just be mindful of that correlation out of gold.
Out of the banks. That's very interesting. I think that's an interesting note to leave the show on. Thanks for tuning in, folks. Moshima, thank you ever so much for standing in and for being an amazing co-host.
No, I love you guys.
We absolutely love having you here. You are welcome anytime. I know our community would love to have more of you on the show. Folks, like, subscribe, follow, share, do all the things that you must do to get us to our next 20,000. Thanks for tuning in, as always. We're going to leave the show on the interesting note that we have been doing for the last couple of weeks. That's our unfiltered opinion of the week. And the honor goes to our honored guest to give us that opinion.
Okay, unfortunately, sorry. It's about the Trump store.
Okay.
All right, I know. I thought I was going to talk about the pineapples and pizza, but I'm just putting a different spin to it.
Okay.
In terms of him being a changer of some sort from what. So I think, unfortunately, he's become that clown. Am I allowed to say that?
You're allowed to say anything.
Okay. He's become that clown, that sacrificial lamb that we're in now, where he is thinking the change is meant for the US, but it's actually disbanding all the shackles that it had created previously with the aid and holding us in chokehold. So if you look at it that way, that he is starting to implement that type of change in order for that independency in a lot of countries, particularly in Africa, you can see a lot of the European countries also thinking, wait, what is happening here? There's a little murmuring revolution in terms of changing how policies were then to newer policies that are beneficial, even despite. So yes, he may be what he is, but just watch the changes that he's making that could be quite beneficial for the continent and just investors in general. Right now, just ride the wave of, the market seemed to love him. So just ride that wave.
The orange Mussolini is unshackling the world, and Mary Mary wouldn't have been proud if they knew what would be happening to their song now. On that note, until next time, investing isn't hard. Just try it.